Welcome back, Alpha Hunters. Hope everybody is doing well this week. The markets are closed for the week of August the 11th, and we had a pretty choppy week this week, so let's get going through it. If you remember at the end of last week, had a pretty good sell-off at the end of the day on Friday. The last 2.5 hours was pretty bearish. So we did come into Monday, had a nice little gap up. Very choppy, nice little steady channel trading higher. Nice little pop right there, bullish to end out the day on Monday. Then we had a nice little gap down Tuesday, kind of flushed out there for the first hour or so, or hour and a half. And then we made a nice little rally. Until the end of the day. And then basically had a flat open for Wednesday. And then just kind of traded down a little bit, sideways for about an hour. And then we just kind of rolled over, took out the low then from Tuesday. And then we had a pretty good rally into the afternoon. And then we rolled over, closing kind of down towards those lows on Wednesday. Thursday, we got CPI. That was probably the bigger one of the week. Nice gap up, and it went. It went for the first 30 minutes. And then after that, we had about 4 hours where we just traded lower the whole time. And we wound up taking out Wednesday's low, and then we got a pretty strong pop. And you thought maybe we were going to rally from here and go into the close. Well, we had a little bit of a rally there for about an hour, and then it rolled over kind of that last hour or so. Friday, we got PPI, and the market had a nice little gap down. It retested higher, but kind of just went choppy. And this was kind of concerning what we were seeing on Friday, the kind of price action we were seeing. Because typically, when the market's going to rally and bounce, and like this is going to be the bottom from the pullback that we've kind of been having here over the past 2 weeks, you typically see the market rally for much of the rest of the whole day. But we didn't really see that. We only got a pop really there for the first hour and 15 minutes. And then it kind of just fizzles out and just kind of went sideways there for the rest of the day. All right, so Thursday morning, we did get that CPI reading, and it did come in at 3.2%. The market was expecting 3.3%, so a little bit lower than what the market was expecting, but it was an uptick over last month's reading, with core inflation actually also coming down 4.7% from 4.8% on the forecast and 4.8% from last month. So core inflation actually did come down a little bit month over month. And then Friday morning, we did get that PPI, which is another inflation metric the Fed does watch, and it came in at 0.3%, while the forecast was calling for 0.2%. So that was pretty much the big economic stuff that we got this week. And next week, we will get the FOMC meeting minutes. All right, taking a look here at sector rotation for the week, and we can see that XLK Tech was the big lagger for the week, really kind of underperforming there. XLY, XLB, discretionaries, and materials, also a little bit on the lagging side there, with some outperformers of financials and communications, XLC there. Staples also outperforming a little bit, and some outperformers, industrials, real estate, and utilities outperforming there pretty good. The two big outperformers for the week, healthcare, XLV, and energies, XLE. So this is the sector performance here for the past 3 weeks, an hourly time frame. And you can see the utilities, tech, and real estate all kind of underperforming. Basically, only 3 underperforming sectors over the past 3 weeks. And you can see a lot of sectors kind of just barely outperforming the market, with XLC and energies outperforming the market the most. Now, one of the reasons why I didn't want to show this is because most of all the big tech stocks have actually reported earnings over this period of time over the past 3 weeks. But we will be getting NVIDIA here in about 2 weeks. And I also think Broadcom will be that week as well. So we'll see what the market looks like when we get out there. But I just wanted to show what the market has been doing and what sectors have been doing what over the past 3 weeks, as we've gone through a lot of earnings really over the past 3 weeks. Federal Reserve balance sheet data week over week came up a little bit higher, 1% higher. So there you go. Federal Reserve still not doing much on the balance sheet. All right, taking a look here at the VIX on the daily. Last week, we know we had a strong move higher, got to about the 17 level. And even on Tuesday, we actually got over that 17 level. Just a nice little wick there. You can see the very tall wick there. But we did pull down Wednesday, Thursday, Friday. And what's really kind of interesting about that is, well, we were actually still moving bearish on the market. This is what you want to see when you want the market to move bearish. You want people to be complacent, like not really taking it seriously, while the market is still moving bearish. And then all of a sudden, out of nowhere, the market just breaks through a level, and then you see the VIX start to climb as the market's starting to break down through some serious levels. So I'd say this is still pretty important to kind of keep your eye on going forward, as if the VIX stays suppressed and the market is moving bearish, that is a good thing. But once the market comes out and probably has a really good 1% down day or thereabouts, coming up here, maybe like this next week or in 2 weeks, then I would imagine the VIX probably going to start to take it seriously, and you're going to see the VIX probably climb. Okay, the dollar, the DXY. Well, last week I kind of mentioned early this week, don't expect much, probably sideways consolidation. Probably as these moving averages kind of help come up and support it. Thursday was looking a little bit sketchy up until we got CPI. Obviously, we were down pretty good. Then we got CPI and it kind of dropped off even more, got pretty low. And then as the market opened and the market sold off, the dollar rallied, and it rallied, continued into Friday. And you see just how this looks here over the past 2 weeks. It looks really strong. So the dollar looks like it wants to continue to push higher. Now it's going to be kind of tough as we do have a little bit of a downtrend kind of coming through here. And you know, we're kind of like in a zone of retesting into this downtrend line. So it's going to be kind of tough. And we're also having the 200 moving average kind of coming down. So we're going to be hitting basically both of these. We're basically on this downtrend line or some form of it. And then we have that 200 moving average just above it. So, you know, it could be a little bit sketchy here. But if we break through both of these, the dollar is going to be putting a hurting on the stock market. The GLD or Gold Trust, nice move lower pretty much the whole week. And yeah, it looks like it wants to break down. And this kind of coincides with the dollar. So if the dollar is looking strong, it's going to kind of put some pressure on the GLD to probably just go lower. So just be a little bit careful here on picking it up. I could definitely understand trying to pick it up at the lows that we had back in June or late June. And it probably will coincide with the 200 moving average, which is basically about the same price level. The 10-year yield, very much like the DXY, kind of just consolidating earlier this week. Nice little pullback into the moving averages. Thursday, nice bullish pop, continuation higher. Friday looks very strong. Yeah, I mean, this looks really good. And I've kind of been mentioning it here for the past weeks, going back months even, that if rates continue to push higher, it's going to put a hurt on the market as people will pull equity funds to go lock up longer term guaranteed returns. And so watch out if this thing continues to climb, as it is making its way now back up to those highs of October. So yeah, just be careful on rates as they do look like they want to continue higher. 10 and 2 yield curve inversion, well, it was basically just a doji for the week. We kind of popped higher on Monday, we come down Tuesday, Wednesday, Thursday popped, Friday was basically flat. So yeah, just a big doji on the week. Not sure what's going on here, but what's really kind of interesting in the kind of the yield space is typically when we start to get the yield curve to uninvert or move back to the positive area for the yield curve and not be inverted, typically what we see is the 2-year fall, or the shorter term rates fall. That's typically what you will see. But right now what we're seeing is the longer term rates are actually pushing higher. So we don't typically see that and don't really have a scenario for how that kind of works out, but I'm sure we'll find out. HYG, we know, is very, very weird and choppy last week, and it was kind of choppy but a little bit more flat this week, just kind of like all over the place, but definitely not setting up to be the most bullish. Very huge upper wick there on Thursday, looking like that was just a retest and maybe it's going to roll back over. And the LQD looks like it even was breaking down later on Thursday. So yeah, the LQD, as you can see, is just floating right on this support level that it's had for the past, what, 8 months, 9 months, 10 months. So it's not looking great there for bonds. And if this breaks down, I mean, you're probably going to be coming down to the 100 level here on the LQD. And, you know, if you think bond yields are going to go higher, well, then most likely bonds are going to break down. And the TLT here, huge, nice retest, very much like the LQD this week. So I expect the TLT to probably just continue to push lower going forward. All right, taking a look here at week-over-week options change, and we can see there's some large spikes of option put buying out here. So yeah, November, October, some pretty large put buying, as well as September 15th, September 8th, and even 2 weeks out, August 25th. So if you combine that with what we know about the VIX and it's still being kind of suppressed as the market looks like it is starting to roll over here a little bit, if you are worried right now is a good time to buy some of that protection while it is cheap. All right, taking a look here at the Fed Watch tool for rate probabilities. September, we do have a pretty strong chance that we're going to get a hold. November, most likely we're going to get a hold again. And then December, another hold, but it's starting to get a little bit more scattered. And then as we get to January, a little bit more of a hold, but it's once we get to March, now we start to see a little bit more chance of a rate cut down 25 basis points. And then also May looks like either a hold or maybe even the start or maybe even another chance of a rate cut. So here's a little headline for you. Investors pile into bonds, leaving stocks behind in August, the chase for returns. So be a little cautious here, and this is kind of what I've been talking about over the past several weeks to months. Even as the market's been rallying, I know I've missed it. Kudos to you if you've gotten it. But as yields continue to push higher, stocks have gotten very expensive, and investors are going to leave stocks behind and go lock up those good yields that we haven't seen in the bond side for quite some time, a couple decades even. All right, taking a look here at the RSP, very subtle breakdown. Week over week, not really much change as from where we closed last Friday to this Friday. A little bit lower, but not a big deal. It was just kind of up and back down and basically flat for the week. I would be a little bit cautious here because it is starting to consolidate right before this double top high and right before the 50 EMA. So if we do have a breakdown from this consolidation area, we might have enough power to go through both zones, and then you're looking to probably come all the way down to the 100 200 moving average, which would also be this high, which that actually would be kind of attractive if that was to happen there on the RSP. The DIA, the Dow Jones ETF, well, this looks a lot better than the other 4 index ETFs. And a lot of that is, well, as we looked at sector rotation, healthcare is doing really good. And the Dow Jones has a pretty large weighting into healthcare. So yeah, it's looking pretty good. Not nearly as much of a pullback from the recent highs over the past couple of weeks. It's kind of hard to say it's going to come back down. But if the market starts to sell off, the Dow Jones isn't going to be able to hide from a market sell-off. So we'll just see how it goes here. But it's looking a lot better than some of the others. And speaking of looking a little rough, this week the IWM had a little bit hard of a breakdown here, especially Tuesday, Wednesday, and Thursday. Kind of rough there. So it is getting close to this high that it put in back in June, mid-June there. And it's also where the 50 EMA is. So are we going to get a bounce there? There's 2 things right there at a pretty good level. So I could see it being a possibility, but the other issue is Thursday we did gap up. We did push higher. We basically retested back up into this lower kind of consolidation zone that we had at the highs, and we came back down. So it's not looking the best. And then Friday's gap down, man, it just doesn't look good on a lot of different charts. So I know we ended the day kind of up off the lows, but it just doesn't look all that great. I'd be a little bit cautious here, but I could totally understand trying to take a shot here around the 190 level. I just think if we start to break down and get through the 188 level, we're probably just coming down. All right, taking a look here at the Qs. The Qs really over the past, since mid-July, we have been pulling back, and we've been pulling back pretty good. Basically sitting right on top of that 50 EMA, and we do have a pretty large pocket in here between the 50 EMA and the 100 moving average. So, that's about 20 points where if we got through there, we can move, and it could happen pretty quick. So we'll see what happens, but we were throwing in some lower wicks Tuesday, Wednesday, and Thursday, and then Friday we just kind of gap below them with a nice little upper wick there. It's very small. The Qs didn't do a whole lot, and this is the first time it's coming to the 50 in quite a while. So is there just no buyers here? And if there's no buyers here, then we'll wind up coming right through it, and then we're gonna go find where the next support area is for buyers, and it might be 20 points lower. All right, taking a look at the SPY. Yeah, speaking of, that Friday gap down, well, Tuesday, Wednesday, and Thursday, we were making lower lows each one of those days, but it was barely. We were barely making new lows, and if the lows were right above these 2 highs, the 2 little tops that we had back in June, and then we just gapped down right on top of those highs, but right below these lows. And if this was just a consolidation level, now we just kind of gap below it, and it kind of could put the pressure on real quick. And if no one's buying the Qs in big tech right now, which the Qs do look kind of rough, then obviously the SPY isn't going to be able to hold itself together because, well, big tech has the biggest weighting in the SPY. So this next week, maybe even the beginning part of the week, I'm not really expecting crazy bullishness, but it might just be some sideways action on the market. And then I would expect us to probably start to break down as we go into the middle and second part of the week, a lot of part of the week next week. So I'd be a little bit cautious here on the market. And there's other areas that look really good, but big tech is not one of them. And that's kind of the issue with the market in general, the SPY and the Qs, because big tech they're the big ones, right? And so it's kind of tough to really say like, hey, should be bullish on the market. If you're not bullish on big tech, it's not going to work. So have a great weekend. Alrighty. Take care, Alpha Hunters.